Yeah. We back again. You know who? The CoWaCo, the company water cooler. Yeah, so like, subscribe, comment, and share. And let y'all know. We're not financial advisors. This is for education purposes only. I got this thing down packed, don't I? All right, so it's time for us to get it in. All right, so first we're going to talk about, this is part two of how to begin investing. Part two. Chris, what you got to say?
Yes, sir. Part two. Yeah, look, you got that down, Leroy. You're right. I think you got that in your sleep. You know what I mean? You probably wake up sometime. Like, comment, share, subscribe. Okay. And then, get up in the morning, brush your teeth. I am Chris. That is Leroy. This is the company Water Cooler. We appreciate you for being with us. The first point. How to begin investing. This is the second part. The reason that it was important to put a second part is because that first point, it was a couple points that I wanted to really go into. There's a couple of things that I think we missed in part one. So part two, a question that one can ask after he or she has invested is, well, what's preventing folks from investing, right? And if you look at the Black community especially, Black people were once stock and bonds themselves. They were once the commodities being traded. So when you are intentionally included as the cattle, you're intentionally included as the thing being bought and sold. Once that is no longer the case, right? Because your people fight very, very hard for you to get out of that, and it's successful. I understand the hesitation. It is totally understandable for someone to say, well, I was once the property, so why would I want to invest in the people and the companies that now say that I can put my resources behind this property, right? Or I can take the money that I earn sharecropping or what have you and put it and give it back to them, right? And in hopes of them returning that equity. So the trust, right? The trust is lack. And I understand that. It's like that totally makes sense. But if you see that, I mean, at a point, you've got to take if you see the wealth being built over on that side, right? And these corrective actions have been put in place. Corrective actions don't happen because people are just good, right? Like it takes place because you fight for that corrective action. People die for that corrective action. So if you want something changed, obviously you have to be the one to change it. You can't sit around, you can't say, well, hey, I want this to be better, but not put the work in for that to be better. Sacrifice. We have to start learning sacrifice at a deeper level. Everybody, right? Black, white, or otherwise. Everybody has to learn, because you don't get anywhere if you don't do that. So I totally understand. Like, hey, we used to be so, and even if you don't know that your ancestors used to be sold as commodities and were the property, and you still don't invest because you think, again, like we mentioned last week, oh, you have to have a PhD, or you have to be an MBA, or you have to know these. Even if you don't know the aforementioned history, but you still hold that contemporary idea that I have to be this smart to invest. And Leroy gave you what, 5 or 6? He gave you like 10 different platforms to invest, right? And we'll go over a few of those again today. But understanding that, yes, it's a tragic history, and it should not have taken place, and it's unfortunate. But the same way that Black people got out of slavery is the same way that they can get into wealth. You have to fight for it. You have to sacrifice. You have to put your funds and resources into that. So I would just say, as an investor, obviously, and Leroy is an investor, obviously, the sensei, okay, that he doesn't, that name is that name for a reason. But the reason that he is that, is because he said, hey, I'm gonna take a chance on my finance, I'm gonna take a chance on these really, really good companies that are no longer trading Black people. They're not trading people anymore. They're trading ideas and manufacturing plants and products, and in exchange for you investing their money, right? So that they can put that back into the business so they can grow that business. So now, instead of men and women, we trade phones and televisions. Okay, so if let's just look at that investment right here. How many phones do you think are gonna move for the rest of the year? How many televisions do you think are gonna move, right? Thanksgiving is not here yet. Christmas is not here yet. That's a huge time for electronics in general. Okay, so you look at the most profitable electronics companies, the most profitable electronic producers. Boom, you put your money in there, right? So look at it now, like we will mention all the time, 5, 10, 15, 20 years. And then you do have short-term plays. Okay, well, I think this Christmas is gonna be very, very nice. What companies are gonna be very profitable this Christmas, right? Now, this Christmas specifically, I'm gonna say definitely invest and hold for the long term, get in between now and September. But America, look how much money Americans spend every year around this time for the holidays, even in a pandemic. Think about it, right? If you follow those, even if you just get in at the low in July or September and hold until that next year when it gets high again, back, let's say you buy in July of this year and you want to sell in September of next year. I don't recommend that, just because long-term to me is at least 10 years. I know some might, well, 5 is long. No, 10 years to me, because I can see a company stock double, get in, and I'm good to get out. But even if you just look at trends, like we will keep mentioning, what company is good at this? What company is good at doing that? Where will they be in a year, 5 years, 10 years, right? You could be a seasonal investor if you want. Don't recommend it, but that could be something that you do. But I again, understanding the circumstances for investing, and then going back to some advice that I had last time, that cousin that you got that's always reading on the market, always got papers in front of them, always lurking and searching for the best companies, right? That cousin that you got, she's on her way to becoming a lawyer, but she's also getting her money right. Sit and talk with those family members. Wealth starts in the family. Before that, obviously, the individual. You need to, I can't look out for you if I haven't looked out for myself. So you start with yourself. But that immediate push right after that is the family. So you take that family unit, you work on wealth together, and then you go forward. The second point, how difficult is it to invest? Not at all. And we explained that last time. You have so many different apps to invest in, to invest with. They give you stocks now. They give you, Webull gives you what, 4 companies or 5 companies? You get like an immediate investment in those. I mean, now granted, this is not Apple. They're not giving you whole Apple, Tesla, Home Depot, Walmart shares. But you are getting, that would be great. But you are getting 4 to 5 equities for signing up. Robinhood does the same. Schwab does not do that. JP Morgan, the more traditional, sophisticated institutions do not do that. But they do have referral codes and bonuses for you to recommend people, to recommend family. That's all of them, right? And then the last point about diversification of portfolio. So real estate is important, yes. Equities are important, yes. Stocks are important. Bonds are important, yes. Master one of those avenues first, and then move to the other. Because what you'll find is, once you get a very, very comfortable grasp on stocks, real estate comes naturally. right? Crypto comes naturally because it's the same foundational rules. So nothing changes between stocks and real estate and crypto. Nothing changes between those, right? Nothing changes between commodities and crypto. And it's the same. Think about it. Why would the foundation be different when the people that have the most stocks also have the most real estate, also have the most crypto, also have the most commodity? Why would we mess ourselves up and change the foundational template for every single equities market? We wouldn't do that. So master one, become a master at one, and then begin your work in the other fields.
Okay. I want to add to point where your first point you was talking about, kind of like what prevents, people from investing. It's because we don't budget it in. We don't see it as being important. And I think we should change our mindset when it comes to that and budgeting it in, like make it important to put it into your finances, whenever you're doing a budget. You'll be budgeting for everything else, but why not budget for something that's going to set yourself straight, for you, your family, your children. Budget it in, don't be scared.
Yeah.
And then also, some of the stuff that we actually spend our money on, we don't need to. It's like wants. Investing should be a need. And entertainment sometimes, that's a want. But investing, that's more better than entertainment. Because what happens, right? If you actually see investing as a need, that entertainment part, man, you can be able to ball out. Well, you don't want to, I'm not saying ball out like that, but what I mean is, like.
What I mean is ball slightly. Don't ball out, ball slightly. Show me, pull up with 20 points, but then take a break. We got you.
So yeah, so look, and like Chris said, it's not that difficult. Look, it seems difficult because you got to have an interest in it. Just grab this little tiny interest in it. And then now you just putting that little tiny interest that you keep, doing that little interest, the interest that the small interest that you're actually doing, it grows. Oh, you know what? I just not thought about something. So just think about this. As we always say, the little amount of money that you put in of investing, it grows bigger. And as you continue to do it, it gets easier. So same concept that I was talking about, just put a little bit of interest, have some interest in it. Keep doing it little by little, and it comes a little easier it comes easier. Like, oh, okay. So
yeah, that's a perfect point. That's a perfect point. That is magnificent advice, because budgeting, right? Like it's so seemingly that's difficult. But if you think about it, like you said, the entertainment piece, right? And it was some studies that I was reading. And I take this with a grain of salt because I'm not able to source it. So never trust somebody that says they were reading some studies but can't cite you the source. So take this for what it is. But so most people's liabilities are eating out and food, right? Like that's a high percentage of a lot of people's economic failures or economic, right? It's like, oh, well, I got to go out and spend 10, 15, $20 on this. And let's say you're living with your lady, you're living with your guy. That's $40. That's $50. I don't know what couple can go out now for less than $50. You know what I mean? Like somewhere nice where they want to sit down, or even if you take out. But when you micro invest and you take that $5, that $10, that $20, auto selected out of your account into a brokerage, right? I mean, think about it. When you put, because that's, I mean, $5, $10 a week, like, let's be honest, like you could do these little cool fun tricks, like, okay, I'm not gonna get coffee 2 days this week, and I'm gonna take the coffee breakfast money and I'm gonna put it into the market, and that's the only time I'm gonna invest, and I'm gonna take all my other money and do what I want. That's great, that's fine, you could do that. But and it is passive, right? And it's something that you don't have to think about, and you're automatically invested, right? You could do the M1 finance thing where it goes into a portfolio of companies that you choose, or you could say, hey, I only want to invest in the top 2 companies in the world. Boom. Okay, so that happens. And then every week, $5, $10, $20 will go into that. But Leroy makes a perfect point about budgeting, because you sit down and you say, okay, well, how much is my mortgage this month? How much is my rent? How much is my car? How much is my insurance? How much is, what budget will I set for grocery this month? How much is diapers? How much are diapers? How much are wipes, right? How much is, just how much is washing my clothes, right? If it's $80 a month to wash clothes, how can you get that down? Or, how can you get down the food budget? Are you interested in using coupons, sales from different locations? But it all goes back to what are your investments giving you in return? Again, you go to any of these fast food spots and you get a number 5 with extra pickles and no mayo, and you extra large the drink, and that's $15. Okay, so and then 2 hours later, you hungry again. So you literally just threw $15 at an organization. They gave you, I don't know, they gave you slop in return, and now you gotta have a big bowl of cereal. You gotta have a big ass bowl of whatever. But now you have to supplement that loss. You just lost $15, right? Take that money and invest that money. If you budget, here's the thing: if you budget for your budget, so budget for everything that you have to pay every month, and then budget when that is adjusted and it's not that price. So if you budget $300 a month for grocery, but you end up spending $275, that next month budget $275 to see if you can get down to $250, and that leftover money that you have, invest that into the market, put that out there into investments. So that way, okay, cool. Now I've got my food budget down to 200. Let's say, if you can get your food budget down to 200, family of 4, you, your wife, and your kids, man, that'd be great. But it requires effort. Like I said, coupons, and look at shopping at institutions outside of what you like. I'm not particular to one grocery store because I don't have investments in one grocery store. So whichever grocery store offers me the best deal, that's the one I'm going to. I treat it like I do gasoline. I don't have to just get gas from this gas station or that gas station. I don't have to do that, right? What gas has everybody's got Gas Buddy and TripAdvisor. Which one has the cheapest gas? That's where I'm going if it's not too far away. I'm gonna find the cheapest gas in my area, and that's where I'm gonna go. I'm not loyal to any one of those. And even if I have a few shares of Exxon or a few shares of Chevron, it's not gonna hurt me to go over to BP and get some gas. You know what I mean? Right? Because I don't have tens of thousands. Now I'm working my way to that. So when I do have 100,000 shares of Exxon, I will be exclusively getting gasoline from them because I'm paying myself with the dividends and the good business that they're running. So the share price is going to go up every year. But don't be loyal to something or someone that's not loyal to you. Find the best price, take the rest of that money and invest.
Good point, good point, good point. All right.
And then one more point, Leroy, one more point, because we preaching on today. One more point. Even if you just take $5-10 a week and put it in the shoebox and put it somewhere in the closet, put it somewhere under your bed, you put that somewhere safe in the house, that first week, obviously, is going to be worth that investment because that'll be 100%. And then that second week is going to go down, right? So if it's $5, the next week is going to be $5 on top of that. So now you have 10. The next week, the third week is going to be $15 total from your initial $5 investment, $5 investment, but it's only going to be $5 up from the 10 that you already had. So that's 50%. And so on and so forth, right? So every week. And eventually you'll get to a point where you've got 1,000 in the shoebox and you add another 5, that's obviously a much smaller percentage. But it's better than not doing anything. And it's better than not investing your money, right? If you can, and you can afford to put $100 in one week, $200 in the next, $400 in the next, if you got it like that, of course, because you're paying yourself. And then you can take that lump sum of money and go buy some land. You can take that lump sum of money and put it into your favorite stock. Put it into the best performing, most profitable, gonna be here in 30 years stock. So even if you do that, even if you start off with the shoebox, work your way towards putting your money behind these top tier companies that are gonna return your investment far greater than what you ever could putting your money in a shoebox.
That's what's up. See, again, that's why he's called Grand Master Sensei. All right.
What God allows, what God allows.
All right. So next point we got is where to find information on companies. Like what resources to be able to actually use.
Yeah. So I've got a few, Leroy. I got a few. So the first, and this one is my favorite. So Yahoo Finance is my favorite place to go to look at, obviously, share price, but to also look at the holders in the institution or in the company. So if I'm looking at, if I want to see the percentage of institutions, or if I want to see the number of institutions that have investments in a company I'm interested in investing in, or a company I'm already invested in, I'll go to Yahoo Finance. They've got a beautiful layout. I can go to the tab that says holders. I can look at the max chart. I can look at when they gave dividends. I can even look at when I maximize the screen. I can even look at stop loss. I can look at the resistance, and I can look at the support. Now that's for the traders out there. But I can look to see, okay, at $125.61, this is Apple's resistance, right? I can look and I can say, okay, well, good. I'm right around there. That's I'm gonna get in. I'm gonna set my price. If I want to set my price at 125.61, okay, cool. But I can look at the resistance, right? I can look at, well, dang, where is Apple struggling to get above? And I can play that middle in between those two. Okay, I can see, okay, well, boom, this is where, and then even on that platform, I believe, let's see, you can see historical data. They got the charts. You can switch to charts. But my favorite, you can actually compare companies. You can actually compare I can compare Apple, right? So the beautiful layout there. So finance, that tab, right? That third one right there. Once you click on that and you open that up, you have the ability, right? And then it shows you all of the market. So you click there, right? And Leroy is walking us through this. So we have Apple, right? And so what you do, so I make it a thing to memorize ticker symbols, but obviously what Leroy is doing, you can do that too. You can type out the company, obviously it'll pull up, it's the same thing. But when you pull that up and you click, right? So you got AAPL, this is Apple. You can see right now it's trading at $150. You can see that chart there for the day. You can see the market cap, in the bottom left, well, the left corner on my side, you can see where the value of the company is. Yahoo Finance estimated it's overvalued. So it might be, it might be a good idea to wait. Then you have the holders, the analysis, the options. You have all of those things available to you. So if I want, right, and then there is a comparison tool that you can use once you full screen the chart, and you can start bringing in other companies. But Leroy, if you click holders,
okay,
right there for me,
yeah, right here.
What you're going to see is the percentage. So that, what is that number? 5,484 institutions, right? That am I reading that right?
Yeah, that's 5,400.
Right.
That is a lot of institutions.
That's a lot of institutions. And if you look beneath that, the top institution holders, right? So Vanguard, of course, what Vanguard owns and BlackRock combined own everything. But Berkshire Hathaway, right? FMR. And some of these are institutions that you don't know. But then you go below that, the top mutual fund holders. So this is Vanguard, again, Fidelity, S&P, right? You can go, now that you know that Vanguard owns a very hefty portion of Apple, you can go to see what else Vanguard has in their portfolio. And you can invest in those companies as well. But this is just a really good tool to look to see, okay, well here, these are the companies that have ownership in this, right? And then you can go back and play around with it, full screen the video, pull up the chart over the past, the entire existence of the company, look at the ebbs and flows. You can change it around to the candlestick if you want to see the highs and lows for the day. You can compare it to other companies. It's a really great resource. I use it literally every day. NASDAQ.com is another one. I go there for dividend history. So I want to see, and on NASDAQ, it goes back, I've only found that it goes back to 2013, so it doesn't go past that. So then I'll open up another tab for a Google search and just type in, how long has Apple been giving dividends, right? Or obviously worded a lot better, but how long has Apple paid dividends? So that's a great tool for that. The company website, Apple's website, right? Microsoft's website, that's another great tool, right? The investors relations tab. I mean, I recommend if you're interested in finding out about the company, click the investors relations tab on the company website and reach out to the company, right? And if they don't respond to you, reach out to them again. Hey, I'm an investor in the company. I want to know about X, Y, Z. If they don't respond to your emails, give them a call. They got an 800 number or an 888 number. You can do that as well. But that's obviously, you want to go to the source. That's a horse. That's the horse. You want to go to the horse, right? That's how you find out information about the company. So you go to the company's website, you see their investors relations, and they'll have it broken down. And you can even find dividend history. You can find everything on the company because it's their website. They're giving you that information. ETFDB.com for obviously the ETFs. We love ETFDB and ETF.com as well. So what they're going to do, these websites, they're going to break down SPY, XLK, XLY. They're going to break down all of these ETFs for you, the percentage that's invested in the United States, the percentage that's invested everywhere. And then, of course, they're going to give you the companies inside of that ETF and the percentage that those companies hold in that ETF. So that's a good one. Barchart.com, that's a classic one too. That's, that's for your chart readers. Yeah, that's pretty self-explanatory. We're looking at the charts. Google Finance is also, so we use Google every day for everything. Google is the answer. So when we type in something, when we type in a ticker symbol or we type in a company, Google Finance also pulls up the exact same information that Yahoo Finance pulls up. the exact same information that Alpha will pull up or marketwatch.com will pull up. And you can go, here's the market cap. Here's what the trend is for the past week, what it looks like today, where did it open, where did it close, things of that nature. SEC, so Sierra Echo Charlie.gov, okay? Or I would say and investor.gov. This is the federal government's platform to inform you, the investor, of the goings on of publicly traded companies, okay? So the Securities and Exchange Commission of the United States of America, this institution, the Securities and Exchange Commission's job is to give you, the investor, the best possible and most information for you to succeed in the market, right? This is a taxpayer-funded sector of the federal government. So the job of this is to look out for the people. So when you go to sec.gov and you go to investor.gov and you use, so they have a software called Edgar, okay? Edgar, right? That's Echo, Delta, Gamma, Alpha, Reno. Edgar. That's electronic data gathering, analysis, retrieval tool. So when you go to investor.gov or sec.gov and you're interested in how much money Home Depot made, you're interested in their report, you use that Edgar tool to type in Home Depot in the search bar and all of the public records, how much money Home Depot made, how much money Home Depot lost, where that money was spent, all of that, because it is a publicly traded company and the Securities and Exchange Commission's job is to be as transparent as possible to get you all the information on a company as possible. That's their job. That's what you and I pay them for. You go on there, you can see, I mean, and some of the, obviously this stuff is if you want to get into the weeds of things, like you really, really want to get into it. Like you want to, okay, I want to see how much money Home Depot made last year. I want to see net income, net loss, net gain. I want to see this, like this is if you want to get into the weeds, but it's a brilliant tool for you to use. It's free, obviously, because you pay your taxes, so you pay for that to be used. So it's a tool available for you. But when you want to get into the weeds and you want to look at, okay, what is this company really doing? Investor.gov, and you're going to use that Edgar again, Echo, Delta, Gamma, Alpha, Reno. You're going to use that Edgar tool to find out information about that company you're interested in.
Okay. I wanted to also throw in there too, when he said about Yahoo, Finance, you can actually download the app on your phone too, So look, if you're not at the house, and you're constantly on the move, you get that app on your phone, you can take a look at the different stuff that he was mentioning. And you can actually download this app called Webull, Webull, Webull. Now Webull, it basically is a great tool that has a lot of information in there too. Matter of fact, whenever you actually look up a company on Webull, right? You even have the capability to even find out what ETFs those companies are actually in, like what percentages they actually hold in ETFs. So, and that's one thing I actually like about the Webull app, whenever actually using it. So it even breaks down, again, like what percentages, like institutions actually, have in particular, companies. They're really good in with their charts, showing like, information about charts, news that they actually, have on specific companies. And what's surprising though is, again, I'm bringing this up again, Cash App, right? Cash App actually, whenever you actually searching a company, they have really good news articles about a company. And I was surprised to find out, like, wow, they're pretty good with keeping up with the a company's news about, you know, that particular company. And then it also leads you into, you know, looking at other companies that are also great companies also too, quality companies. So I just want to mention that also too.
Yeah, no, that's good. I didn't know Webull did that. That's good, you know, because I use a few other platforms for my investment. But, and I mean, you use Webull, and I mean, obviously, listen, Google's your friend, bro. So use Google, but when you have that available to you, like use that, because let's say Nike, Apple, Microsoft, Home Depot, Walmart are companies that you want to invest in. If you use Webull, maybe, you know, Webull will be able to tell you, and you might have to cross-reference a few things. But again, you could just Google. But if Webull gives you an ETF that all 5 of those companies are in, you can invest in that ETF and not invest in those individual companies. Because you know that ETF is good because it has those 5 companies in there. So you got those 5 in there, and let's say those that hopefully, if you know, hopefully they will have those 5 at the top. But let's say Apple is 10%, Nike is 10%, Walmart. Let's say each of them is 10%. So those 5 companies make up half of that ETF. You put your money in that, you're now invested in those 5 companies. So you don't have to invest in Nike individually, Apple individually, Walmart individually. You invest in that ETF, and now you're in all of those. And then, of course, you know, it'll break it down for the dividends that each of those companies give, and you're going to, you know, they'll break it down like that. Mm-hmm. But instead of you investing in just one company or a handful of the companies, right? 4 to like 10 is what a lot of experts are saying. You know, don't make your portfolio bigger than 12, right? Like if you can help it, if you know what you're doing, if you know what you are doing, a dozen companies or less for individual investments is the best way to go. But if you want to, you know, if you just want to get your feet wet, you just want to get in there, you know, I'm going to put a little bit of money in SPY, I'll put some money in XLK, XLY, VOO, I'll put some money in these different ETFs. So you do that, right? Because, and then you can even put your money in the entire stock market all together. You can invest in every single company listed in the stock market and go just, hey, you know what? I'm just going to invest in the whole market because they have that available for you as well. If you are extremely conservative and extremely nervous about it, you can also do that as well. But putting your money in these companies, you don't have to take a chance on putting them on individual, because Apple and Nike occupy 2 different sectors of the market. So if technology is down and not doing so hot, but the consumer staples, I believe Nike is a staple, because you got to have your Nikes, you got to have your checks. If staples is doing good, right? Or it could be, it's one of those 2. It's discretionary. I'm gonna say staples. Nike is a consumer staples company. If I'm wrong, I'm wrong. But it's in the consumer staple index. If technology is not doing hot, consumer staples is doing good, and you've invested in Nike and you've invested in Apple, you know, it might balance out depending on how well Nike's doing. But you don't even have to do that. You can invest in an ETF that has technology, consumer staples, industrials, materials, healthcare, healthcare, not the same, but you could invest in consumer discretionary and consumer staples. You could have that ETF that pulls from all 11 sectors of the market into that one ETF. And feel comfortable about investing. Okay, well, yeah, I've got some investments in technology, I've got some in materials, right? I've got some in discretionary, I got some in right? I've got some in these, and you can go from there.
So, Chris,
yeah,
how long do you think should a person basically kind of like make a decision to invest in a company? How long do you think they should take before they make that decision?
I think if you are starting from ground zero and you have absolutely no knowledge on this, but you want to get invested, you want to put your money in, after, and this is not just you sitting in front of the computer and doing it all day. This is you spending quality time dedicated to researching one company or to researching a few companies. I'm gonna say after 2 weeks,
Okay.
you should be comfortable and ready to invest if you do, mid to high level research. Now, in terms of hours, like real hours, if you sit down and that is your focus, is to invest and research these companies and find out which ones are good, find out which ones will bring you back what you want, find out which ones. 50 hours of research, 50 hours. Not 2 days back to back where you're also looking at YouTube videos about how to make a, I don't know, make something, right? Arts and crafts, right? Not at that same time you're watching, HGTV, looking at the price of renovating the kitchen. Not at the same time you're sitting on your porch, drinking wine or drinking beer with your buddies, your comrades, your dudes, your dunnies. No. 50 hours of, okay, from hour 1 to hour 50. This is, okay, boom. And that comes out, I would say it should come out to daily reasonable, about 1 to 2 hours, right? So I say minimum 2 weeks, 14 days. But if you can spare 1 to 2 hours a day after a few weeks, right? After, let's say you spend 2 hours a day researching, right? 14 hours a week. You include Saturday and Sunday, right? So 14 hours a week researching intensely. After 3 weeks, you should be ready. But 2 weeks, if you just starting off, you don't know anything, and you're doing a high level of research every week, cool, 2 weeks. But if you're doing a low level research or low to mid level research, 3 weeks. And then if you have a working knowledge of the market and and you test yourself and you know a lot more than what you think you do, that following week, start investing.
Okay, yeah. So basically, as you get, acclimated to doing it, it comes a bit easier. It won't even take you that long to make a decision also too.
Yep.
And
No, that's got to, okay. Yeah, we gonna put Nike in. Yeah, that's discretionary. Because again, a staple is Procter and Gamble, right? A staple is Walmart, right? A staple is a provider of something that you absolutely need. I don't know why I'm stumbling over words today, but yes, discretionary.
okay, yeah.
Yeah, it's Nike is a consumer discretionary.
All right. So, actually,
Consumer discretionary company.
huh? What you about to say? All right. So the company that we're gonna pick for this week right here.
Oh yeah. So I'm still on my dividend tier. I'm still on my dividend run. So this week and the next, I'll be finding companies that provide good dividends. Then I'm going to get back to the regularly scheduled programming. JP Morgan.
Oh shoot. Okay.
And Dow, DOW. So JP Morgan has a 3.5% dividend yield and a 16% dividend payout ratio. So a payout, well, let me give you Dow first. Not the Dow, but Dow Inc. So not the Dow Jones, but Dow Inc. 5.9% dividend yield, 32% dividend payout ratio. Dividend payout ratio being the percentage of net income after all expenses are paid, after everything is accounted for. This is the money that's ours. This is the money that we have in our lap. Dividend payout ratio is the percentage of that money given back to investors. So 16% for JP Morgan and then double for Dow at 32%. This means that they're not, what they're doing with the majority of the money, and obviously JP Morgan being a bank, they're going to put that in mortgages, you know, in real estate. They're going to invest that in other assets, and then obviously companies. They're going to put that in companies as well. And Dow Inc. is going to put the money back in the company and also have a venture capital wing of the company that invests in new technologies and makes everything great and does that. So when I look at a good dividend payout ratio for a company, anything over 50%, I do a little more research on, just because I want to see where, you know, what they're doing with the other half of that money, because 50% is a lot to give back to shareholders. But with these two companies, because they're giving such a small percent of the, it's a noticeable percent, obviously, because they're giving the majority of the money back to the business and other investments, I'm content and I'm comfortable, because they're going to sustain the life of that company by putting the majority of the money back into the company and the majority of the money into other investments. I'm going JP Morgan this week, and I'm going down for my portfolio. And I'm actually, you know, I think next week I'm just going to pick one, and that's going to be it, because 4 to 6 dividend stocks in the portfolio is good. And I definitely, like the way that you use different apps for different things, when you learn what a dividend is, when you learn how best to make money back from the market, an investor should have a dividend portfolio, and they should have a main or regular portfolio. So you should have a portfolio over here that's bringing you in money quarterly, or if you get some REITs in there, some real estate investment trust bringing you money in monthly, then you should have another portfolio with the top 4, 5, 6 companies that's bringing you increased value. So JP Morgan Chase and Dow, D-O-W. Okay. And JPM for JP Morgan Chase.
So I'm gonna actually go with Nike. You bring up Nike too, and Nike is a consumer discretionary stock. It is.
Yes, it's a staple in my life, so you know I get emotional about Nike. So it's a staple here.
It's actually,
you know, it's a staple. It's a staple here, but it is a discretionary.
It's a discretionary, so it's a consumer discretionary. So we want to make sure and clear it up. Because Nike is a really good company to put your money into, so all right. So now also to match Chris talking about some dividends, you know what I mean? I'm gonna go with Pepsi. You got a good dividend and growth, and I'm hit FedEx. They got good growth and dividend also too. So
man,
that's
some of the ones right there.
Say that again?
Yeah, that's some of the ones. Listen, sticking to the ones that you got, that's some of the ones too. And it's really to sort of overview and highlight any fears about getting in the market. Listen, you can reach out to us via email. We got it in the description. Just reach out to us. Hey, look, this is, you know what I mean? Reach out to us, send us an email, leave a comment. Again, Leroy gonna read them. But hey, this is where I'm looking to get into the market, man. I'm nervous. I'm this, I'm that. Like, we're absolutely here to help in any way we can as it pertains to getting your money invested, getting you right, getting you squared away. And it's scary times, right? Like a lot of people say, oh, well, the market, what it's doing, this is doing that. We're in this, we're in the end time. Listen, every day is the end of the world for somebody. So don't let another day go by when you're not making use of your time, right? And going back to Leroy's his magnificent point, his brilliant point, the splendid point, his excellent point about budgeting, right? With budgeting comes the lessening of distractions.
Mm.
When you do that and you get rid of all the distraction and all the craziness that's going, if you're watching this video right now, yes, this is a distraction for you. But it's a good distraction because it's us, imparting our knowledge on you. So we appreciate you. But you have that ability to do that. Like, start to think about the things that you have the ability to do. Start to think about what you have, and then start to plan, and not just think about, but start putting it on paper, what you're going to do with what you have to get more. Okay, and to make your life the life that you want, to make it comfortable. Right? Obviously, you use logic, reason, and sound to do that. But put on paper where you're going to be. This is what I'm going to do. Again, I get it's nerve-wracking. One day the news is good, one day is bad, the next day is horrible, the next day is good. Eliminate all those distractions. Do your research, stay focused, invest.
All right, you all. This is the end of, the end of this video, of the CoWaCo, the company water cooler. Like, subscribe, share, and comment. And thank you all for watching today.
We shall return. We'll see y'all next week.
Uh-huh.